Well, the Occupy Wall Street movement has been on the move today, which is the second anniversary of that movement. And while protesters failed to disrupt the New York Stock Exchange, they still plan to disrupt the subway service later on today. It is, of course, almost rush hour here in New York. Now, our next guest has praised Occupy Wall Street for bringing issues to the table and had even visited Zuccotti Park earlier this month. Joining us now from Sacramento is Phil Angelides, former chairman of the Financial Crisis Inquiry Commission, and before that, California State Treasurer from 1999 to 2007. Phil, thanks for joining us. I've got to ask you, you probably turned a few heads. You said specifically a couple of weeks ago that you thought Occupy Wall Street had done the country a great service. What do you mean by that?
Well, absolutely. I mean, what we have here now is a debate going on in this country about what kind of economy we want. And the fact is, 3 years after the financial collapse, we have 24 million people out of work or can't find full-time work. We've got the lowest ratio of wages to GDP that we've had since the Depression, growing income inequality. So these are very important issues as this country tries to come out of this deep economic recession. And I give credit to the people who have come to the public squares in America, as we encourage people to do across the world, to raise their voice and raise these issues.
But, you know, these issues aren't suddenly new to us. We've been all dealing with this all in our own way for the past 3 years. So why do we suddenly need people to come out and tell us what we already know?
Well, in fact, they're not new. In fact, wages now have been stagnant for most Americans since 1997. As, since the recovery, in quotes, started in May of 2009, 92% of the country's income growth has gone to corporate profit, not wages. And I think what you're seeing here is a growing sense of frustration among working Americans that the economy is not working for everyone. So we may be dealing with these issues, but, candidly, the center of political debate in Washington has not been on how to put people back to work, how to spread prosperity. And I think you see more and more people in this country saying that's what ought to be at the center of our economic and political debate in this country.
Now, Phil, you're able to speak very coherently about these issues, but no one from the movement that we've been able to interview has really been able to state them as clearly as you have. Is that part of the problem, why it's not moving forward, because they don't have necessarily a cohesive leadership?
Well, it's interesting. First of all, someone was reminding me the other day, back in the 1960s in California, the first farm worker strikes didn't start with Cesar Chavez and a well-defined leadership movement. It was the Filipino workers who began those strikes. I had the opportunity last week. I went to Zuccotti Park. I met with 3 young people, all out of college, one out of Reed College, one out of the New School, one out of Brown. They are articulate, bright young people who want to change the course of our country. So I think you'll see some evolution. You'll see leaders emerge. They describe their movement as leaderful, not leaderless. But I think their message has been very clear. There's growing income inequality, and the economy cannot be sustained in that fashion. So I don't really buy this notion they've been disparate. I think they've put the issue squarely on the table, that we need to put people back to work. We've had 4 million people lose their homes to foreclosure. That may go to 8 to 13 million. And there needs to be a fundamental remaking of this economy to encourage job creation, wealth creation, broad prosperity. So I think they've hit the mark here, even though it may not, it may not be in the establishment form.
Okay, a number of issues I want to ask you about. Obviously, given that you headed up the Financial Crisis Inquiry Commission, Chamber of Commerce, U.S. Chamber of Commerce has said that it opposes the Volcker Rule. How do you respond to that?
Well, look, here's what's stunning. 3 years after the financial collapse, so little has changed. We saw this with MF Global, leverage 40 to 1, very little liquidity. The derivatives market is still hidden. We don't know, for example, which American banks are exposed to the Eurozone bonds, whether it's a $100 billion exposure, whether it's a $1 trillion exposure. The Volcker Rule is a pretty simple concept, which is financial institutions with the backing of the U.S. taxpayers should not be doing proprietary trading that's risky and essentially creates systemic risk. And so I think the Volcker Rule needs to move ahead. But what you see from the Chamber of Commerce and others in the financial sector is delay, 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 which really means no reform, no reform, no reform.
And that might ultimately tap into what's happening on Occupy Wall Street, a curious tie-in.
Yeah, and let me just say, it does tie in because it shows no willingness to re-examine what brought us into this economic calamity, the kind of risks that were being taken on Wall Street, the lack of transparency, a financial system that became more about trading than investing and lending to create jobs. You know, even though the encampment at Zuccotti Park was taken down by New York City, here's my prediction, that even though the tents may be gone, the tarps may be gone, the torch has been lit for a real debate here on economic and financial reform. And when the chamber weighs in like they did today, it just reinforces the sense that there's an unwillingness to re-examine and change the system that brought us so much misery and devastation economically in this country.
All right, Phil Angelides, former chairman of the Financial Crisis Inquiry Commission and California State Treasurer, we appreciate you joining us as always, Phil. Thanks.
Good to be with you. Thank you.